Good morning, Bitcoiners. Hello, and welcome back once again to your Bitcoin economic calendar. I'm Mauricio Di Bartolomeo, co-founder and chief strategy officer here at Ledn. And as always, we bring you the news and analysis you need for the week ahead in Bitcoin. We had a very active week last week, lots to talk about and cover in this issue. Particularly, we're going to talk about the major event last week, which was the collapse of the Terra stablecoin and the Luna protocol token. We put out a blog piece around this last week, and we're going to share that and highlight that again. But the summary is that, in fact, Ledn was not impacted by this event. We do not support the Luna protocol token or the Terra stablecoin. We only work with Bitcoin and USDC. We'll get into the details later in this issue. But suffice to say that we're very proud to work with only the highest quality assets. And this is particularly true in the current market conditions that we're seeing recently. So we're also going to talk about the activity of institutional investors this dip around. We did see institutional investors step in and buy the dip, and we're going to show some of the data that supports that. And lastly, the correlation between Bitcoin and capital markets in the US continues to be pretty strong, which might continue to add headwinds as markets in general have a hard time escaping the Fed's very aggressive stance against inflation. So lots to cover today. Grab your coffees. It's going to be a great one. Okay, so before we get going, we wanted to share the blog that we published last week around the events surrounding the collapse of the Terra stablecoin, the Terra dollar stablecoin collapse and the Luna token collapse as well. This piece was published because we wanted to essentially let our clients know that very clearly Ledn does not support Terra or the USD stablecoin on its platform, and that the events surrounding or unfolding around Luna and the Terra stablecoin have had no impact on our operations. You can find the blog here. We'll put the links right here under the video so you can take a look as well. But essentially, just in summarized terms, for those of you who may not have heard about what happened, this weekend, UST, or the Terra US dollar, lost its intended peg to the US dollar during a broader market sell-off. Now, in the blog, we summarize what happened step by step, and essentially we lay out the differences between algorithmic and conventional stablecoins and why Ledn is proud to carry USDC on our platform. If you want us to do a full segment or a full video breaking down this blog piece, please let us know in the comments. We'll be happy to do that as well. But just to summarize here, the sort of last paragraph around our perspective, although both USDC and UST, the Terra dollar, are both referred to as stable coins, they are in fact very different things. USDC, the stablecoin that was created and managed by Circle, it was also actually the co-creator of Circle or of USDC was actually Coinbase, who is an investor in Ledn. So just putting that out there for disclosure. But this USDC stablecoin, this Circle's dollar, has dollar for dollar reserves, meaning a person puts in $1 into a bank account and USDC prints one token. So these reserves are held in bank accounts that are attested by Grant Thornton on a monthly basis. And you can see the attestation link on the blog, but this is much like Ledn does ongoing proof of reserves on our Bitcoin and USDC reserves every 6 months. USDC does the same for its bank account, and it is public so that everyone can go and check, any user of USDC. So as we mentioned, the co-founders or the two entities that founded this dollar or this stablecoin were Circle and Coinbase, and both are highly compliant companies based out of the United States. Now, in contrast, algorithmic stablecoins like the Terra dollar, which just blew up, have inherently volatile designs that are based on a series of assumptions and volatile collateral. So it's very unpredictable. And most of these experiments, if not all of these experiments that have been tried to date, have essentially failed in crypto in terms of algorithmic stablecoins. Now, at Ledn, as you know, we like to keep things simple, transparent, and accessible, so that everyone can verify. And we believe that USDC is a stablecoin that allows us to do just that. So again, you can read the full blog, and if you want us to do a full breakdown in a video, let us know, and we will make sure to include it in our next issue. Now back to Bitcoin. So Looking at the price action before we go into some of the institutional activity and more, just to highlight last week's action, we had a very big down move in exchanges. So for instance, this is an exchange, this is Binance, and it shows here that essentially it had the Bitcoin reached a low last week of basically under $24,000, $23,884 on Binance, but it bounced back and settled. And in fact, it closed basically at 31,329, which essentially means that in the weekly graph, this MicroStrategy support line of 30,700 did hold on the weekly line. Now we see that we are trading below that again today, but it's interesting to see that after a big drawdown, Bitcoin was able to recover up to close the week above that Michael Saylor or MicroStrategy's support line. So consistent with that, and as we've been mentioning here, the 30,700 level was one that many people were going to be on the lookout for, because again, this is the average price of one of the largest institutional holders in the street. And not surprisingly, we saw in last week that there was a big weekly inflow into essentially Bitcoin and crypto markets, more so Bitcoin. We're going to go into the breakdown in a second. But Bitcoin inflows, just to put it here on the chart, this is the weekly inflows per asset. And as you can see, Bitcoin is leading the charge far and above the funds into Bitcoin funds in the last week actually totaled $298 million in terms of new funds going in to buy Bitcoin. And if you see what happens in the other assets, most of them are flat, if not down, which means that institutions really do see this as a buying opportunity in Bitcoin, but it may not be necessarily translating into the other assets within the crypto space. And so this just again reinforces this idea that there is investor appetite for Bitcoin even in times of turmoil. So again, this was very interesting. Looking elsewhere for some transaction data, another piece of data that we wanted to highlight was that daily transactions volumes spiked in May from about 600,000 Bitcoins transferred daily to over 840,000 Bitcoin transferred daily, which was a level not seen in terms of daily transfers since 2011. So that is, it's been a while since that much Bitcoin was moving on chain. Now, despite all this transfer volume, the transaction fees remain quite low, which again shows us that Bitcoin has come a long way from being this network that gets clogged up in moments of high volatility. In fact, it has gotten so much better that even in volatile moments, transaction congestion or network congestion is no longer even a conversation. So this is a big testament to the throughput improvements that the Bitcoin protocol has seen over the last few years. Moving on for a second into some of Bitcoin's correlations. So as we've been talking about here, Bitcoin's correlation with equity markets, particularly the S&P 500, we see that correlation is still very high, near record levels, but it has actually come off the absolute highs that it was literally just a few days ago. So yes, it remains high, but at least it's not going higher for now. That is the correlation with the S&P 500. Now, if we look at the correlation with other assets like the dollar index and gold, we are seeing that in fact the correlation between Bitcoin, the dollar index, and gold has been breaking down as of late. It has essentially continued to be correlated with the S&P 500, but it has broken its correlation with the dollar index and gold. And in other words, dollar and gold are seen as the very safe assets in the current market environment, and the S&P, the NASDAQ, and others are seen farther out in the risk spectrum. So while Bitcoin is still has come a long way in terms of maturity, many investors still place it in a similar risk spectrum than that of equities, etc., and not so much dollar and gold. But again, time will tell. Bitcoin continues to progress closer and closer to behaving like a reserve asset, as we've been following here. It has held up really well, as has gold and the dollar, since the war in the Ukraine started. And again, as more of these events unfold and Bitcoin goes through more ups and downs, we will, it is likely that it continues to trade in a correlation that is more similar to that of gold eventually than that of equity markets. Outside of these correlations, just looking at some last sort of market indicators here, we see that there is a big option expiration week in the week ahead. There's been quite a bit of buildup of put contracts in here relative to historical. We see that most times there's more calls than puts in a given month, but in this one, it's looking quite balanced, almost tilting the skews to the put side. Same here, like the current week and the week ahead seem to be weeks where investors are looking for quite a bit of protection to the downside. And looking at the shape of the futures curves, we still see broadly contango on the curves. Some of them are looking a little bit wonky, but most of them are trading at, the curve is trading at prices higher out in the future, which again is healthy. This, for example, the FTX future curve looks pretty healthy as well. And lastly, one other thing to highlight was that the discount on the GBTC units relative to the net asset value of the fund have actually reached a new record low. They reached a new record low last week. And this just signals that investors are less optimistic of the potential of this turning into an ETF anytime soon. So again, something interesting to consider. We see that the implied annualized yields on the 1 month and 3 month futures trades are still at 56 base points on the 1 month and 1.68 on the 3 month. So this hasn't really changed much since the last time. We'll continue to keep monitoring this and we'll keep you posted. But again, even in the current market conditions, funding rates are still positive in most perpetual futures, which means that a lot, highly leveraged investors may not necessarily be looking for a big downward move in the current conditions. And as always, we wrap up with what is ahead for the week. We had Fed President John Williams speaking yesterday, and today will be actually the busiest day on tap for the week. We have St. Louis Fed President James Bullard talking to Newsroom to speak about the economy. We also have retail sales and industrial production index. We have Philly Fed President Patrick Harker, speaking on healthcare. And we also have the big boss, Fed Chair Jerome Powell, being interviewed by the Wall Street Journal on the state of the economy and growth today. Again, also today, Cleveland Fed Loretta Mester will speak at a conference about inflation in the United States. And Chicago Fed President Charles Evans is going to speak to money marketeers about the state of the economy. Because of given that the Terra news is in a lot of people's minds, and that it was a big event. It's been covered by most broad podcast financial media. Even the Fed, Treasury Chair Janet Yellen made some comments in a hearing last week about potential stablecoin regulations. So this might be a theme that continues to come up in the week ahead. But again, it's a theme that seems almost inevitable at this point, given what happened in Luna. And again, in this type of environment, very transparent operators should essentially do fairly well. And again, this is why we think USDC is well suited for not only currently but the future that stablecoins that stablecoins can expect. So again, let's go through the rest of the days. That was just what's on tap for today. But as always, we wrap up with the summary of what's happening for the rest of the week. Wednesday, we get building permits and housing starts out of the U.S. investors might be looking to see if there's a rollover or some sort of cooling down in housing starts and in different parts of the U.S. economy as signs that that inflation pressures are essentially turning a corner and rolling over. So they'll be looking very closely at retail sales, housing starts, unemployment numbers in the weeks and months to come. On that note, Thursday we get initial jobless claims out of the U.S. And the Philly Fed Manufacturing Index, as well as existing home sales. So it'll be a very interesting week. We'll continue to keep you posted right here through the Beck and our Twitter at HODL with Ledn. You can catch me at Cryptonomista, Cryptonomist with an A at the end. Thank you so much for watching. If you enjoyed this show, if you learned something, we welcome you to like it, thumbs up, subscribe to our channel, share with your friends. And if you don't yet have a Ledn account, I welcome you to check it out at ledn.io and learn how you can earn the best interest rates on your USDC or stablecoins to stay ahead of inflation with our interest rates, and also on Bitcoin. We do have the best rates on dollar loans backed by Bitcoin if you need liquidity but don't want to sell your stack. And be sure to check out our Bitcoin mortgage, which lets you buy a house as big as your stack. Thank you, everybody. Have a wonderful week and see you next Tuesday.